Welcome to The Explainer. So, if you're trying to navigate the market, there's this one foundational concept that literally dictates every single move you make. It's a distinction so basic that beginners totally agonize over it, and honestly, even some experienced veterans still get it twisted. And here is that big question. What is the actual difference between trading and investing? You hear these terms thrown around interchangeably all the time in the news and on social media, but they represent entirely different strategies, timelines, and frankly, lifestyles. The answer might actually surprise you, and it's definitely going to change how you view your own financial path.
Like our source material points out, even some experienced folks get it twisted. So look, if you've been feeling kind of confused, or if you just assumed these two words meant the exact same thing, take a deep breath. You are definitely not alone here. We're going to break this whole thing down today so it's crystal clear and super easy to understand. All right, let's start with the long game. Investing. Investing is fundamentally all about time. It's buying an asset and just holding onto it for a long, long time, often years or even decades. You completely ignore the daily ups and downs of the market. The market has a terrible Tuesday. You don't panic. You just zoom out and look at the big picture. Think of investing like planting a tree. When you plant a little sapling in your backyard, you don't stand over it every single hour with a ruler stressing out if it hasn't grown a new branch by 2 p.m., right? Of course not. You water it, you make sure it's got good soil, and you just wait. You give it the time it absolutely needs to grow big and strong. Now, in the stock market, planting that tree means buying shares of solid, well-known companies. Think Apple, Tesla, Nvidia. And then you basically just do nothing. You wait 5, 10, or 20 years, because historically, the market goes up. And because of that massive historical trend, this route is generally considered safer. The catch? It takes immense patience. You really have to be willing to just let that tree grow. So looking at this, the core belief of investing is that over 5, 10, or 20 years, these assets are going to be worth way more than they are today. That is the absolute bedrock of investing, right there. You're buying a piece of a company today because you have this incredibly strong conviction that its future value will be significantly higher. It's a game of long-term optimism. Okay, let's shift gears completely. If investing is a quiet walk in the park, trading is, well, it's a high-speed car chase. It is a completely different animal. Trading is buying and selling stocks, options, or crypto within a very short period of time. We're definitely not talking about decades anymore. The pacing, the strategy, the entire mindset, it's just totally different. Forget all about planting trees. Think of trading like surfing. You aren't carefully nurturing a plant in the dirt. You're out in the ocean trying to catch a wave. You get in, you ride the momentum while it's hot, and you get right out before it crashes on you. It's fast, it requires your absolute full attention, and it's 100% about capturing those short bursts of energy. This is the momentum game. Traders are focusing on days, hours, or literally minutes. Their only goal is to profit from price movements. And here's kind of a wild difference. Traders don't actually care if a company is fundamentally good or bad. They don't care about a 10-year vision. They just care about where the price is going next. Because of that, you can make money incredibly fast. But, and this is a massive but, you can lose money incredibly fast too. As you can see, the core timeline of trading boils down to a short period of time. That completely redefines the rules of engagement. You aren't waiting around for a new factory to be built in 5 years. You are reacting to the absolute immediate present. So when you put these two mentalities head to head, the long game versus the short game, the contrast is just wild. On one hand, you're waiting for future value to slowly compound. On the other, you're capitalizing on immediate momentum. They demand entirely different things from you, and honestly, treating them like they're the same thing is a massive recipe for disaster. Let's break this down side by side. First up, your time horizon. Investing takes years. Trading takes days, hours, or even minutes. Next, the goal. Investors are looking for steady growth over time, whereas traders want quick profits from short-term moves. Then there's risk level. Investing is generally lower risk. If the market drops, you have the luxury to just wait it out. Trading, high risk. One bad move and you're in trouble. And finally, time commitment. As an investor, you can check your app maybe once a month. As a trader, you are watching those charts all day long. So which one should you actually choose? Well, I'm not going to sugarcoat it. It entirely depends on your lifestyle. If you have a full-time job, if you've got a family, or if you just don't want to be stressed out 24/7, investing is absolutely your move. It fits right into a busy life.
But if you really have the time to learn and you can handle that constant stress, trading can definitely be more profitable. Now, for the folks leaning toward the low stress route, the set it and forget it strategy is going to be your best friend. You can literally just buy an S&P 500 ETF like SPY or VOO. Basically, these let you own a tiny piece of the top 500 companies in the market, and you just let it grow passively. It's what most normal, busy people do, and it is a tried and true strategy. But here is the secret a lot of people won't tell you. You don't actually have to pick just one. You can totally do both. A lot of highly successful people have a solid, long-term portfolio where most of their wealth grows safely, and they keep a separate, much smaller account to actively trade with. They plant the tree, and they do a little surfing on the side. So, if you're feeling inspired to test those waters, especially on the trading side, we need to have some serious real talk. How do you start safely? Because the absolute last thing you want to do is dive headfirst into the ocean when you don't even know how to swim. Listen to me on this. If you are just starting out, do not start with real money. Seriously. First, open a paper trading account. It uses fake money, but it tracks real market prices. Practice there for at least 30 days. You got to find out if you even like doing this. Some people love the thrill, others find it horribly stressful. And while you're practicing, learn the basics: support, resistance, candlesticks, and above all else, risk management. Trust me, your future self is going to thank you for learning the ropes with fake cash first. And that brings us to the end of this explainer. We've covered the slow, steady growth of the investing tree and the fast, high-stakes wave of the trading world. So now, the ball is in your court. Take a look at your lifestyle, your risk tolerance, and what you actually want out of this. Are you more of a trader or an investor? Remember, the wave is coming. Make sure you're ready for it, whichever path you choose. Thanks so much for hanging out and demystifying the market with me today.